Thanks everybody for joining us this afternoon. I want to take you through kind of an intro to Contango ORE, but then also give you an update on some of our recent activities here. High-level overview of the company. Contango had outlined a 1.3 million ounce measured and indicated gold resource averaging about 4 grams per ton gold in eastern Alaska, east central Alaska, not too far from the Yukon border. Project is located right along the Alaska Highway, so it doesn't have the infrastructure issues that a lot of projects in Alaska have. It literally is just off the road, about 10 miles. It is on private land owned by one of the Alaska Native tribes called the Tetlin Alaska Tribe. We have a business arrangement with them. They'll receive a royalty. The most recent development is at the end of September, we formed a business partnership with Kinross, and we did that to be able to utilize their mill and tailings facility at the Fort Knox operation. And what that allows us to do is to fast track development and production of our Peak Gold deposit on a well-executed plan overseen by one of Alaska's top operating companies with low capital, because we're not building a mill and we're not building a tailings facility. So yeah, very easily executable plan. There's actually two main deposits. They're right next to each other. We call the main Peak Gold deposit and the North Peak Gold deposit. They're located on top of a hill in a series of hills around Tetlin. Kinross's guidance is that they'll be able to produce about 1 million ounces of gold, gold equivalent ounces, and that's gold plus silver, over a 4.5-5 year time period. Capital costs are indicated to be about $110 million. That's about, it's less than a third of what they would have been if we built a mill and a tailings facility on site to develop the ore body. They expect operations to begin in 2024 after permitting is completed. Our share of production would be about 65,000 ounces, gold equivalent ounces, at a cash cost, all-in sustaining cash cost of $750 an ounce. We have an $18 million program that's ongoing right now. We plan to start permitting in the second half of this year, probably in the June-July timeframe, with a feasibility study to be completed in early 2022, and then construction starting in 2023. And production then a year later. Again, not a lot to build on site since we're not building a mill and we're not building a tailings facility. So again, a very easy executable plan.
I'd appreciate if you provided a little background on how you got involved with the story.
There's no other project in Alaska that I know of that's shovel ready, if you will, to deliver 4 to 6 gram ton material to their mill. So when the opportunity came, I thought this is going to be a fun project. It's a real project, and it really has a chance of being a mine in the next 5 years. So that was my reason for joining the group. I like the people and I like the project. It's a win-win deal. It's a great deal for Kinross. Gets more high-grade ore going through their mill. I know Alaska really well. I know it like the back of my hand. I think there's a lot of opportunity in Alaska and a lot of opportunity in the United States and Canada. I'm excited about this story because I've worked on big projects that have big infrastructure challenges, and we've addressed those over time. But what I like about this one is I can see the near-term ability to generate cash flow.
Is there going to be any pre-sorting of the ore before you truck it 400 kilometers down to Fort Knox?
Yeah, no, we don't think that's necessary. The ore kind of self-sorts itself in the sense that it's a massive sulfide ore. So you're kind of either in waste or ore in these kind of deposits. It's not like it's a disseminated deposit where you kind of grade from high grade to medium grade to low grade. We're getting mid-90s to high 80s recoveries across that spectrum of oxidized to non-oxidized ores. So didn't really see a reason to do the ore sorting.
Mixing massive sulfide ore with which seems to be very different to the ore at Fort Knox, is that going to create any problems, or does it mix quite easily?
Yeah, and that was one of my questions to the Fort Knox folks, and they were very. They've done a fair bit of work on this, obviously, and they wouldn't write a check for $93 million unless they had. They're very confident that the ore type is consistent with what they're processing at Fort Knox.
Do I understand that basically, ultimately, you start shipping ore to Fort Knox, you get money, and with that money, you're a self-funded exploration of the other land and properties you have?
Yeah, I mean, just to go over some quick math, if we're producing 65,000 ounces net to the company at $750 an ounce. In rough numbers, that's close to $1,000 margin. So we're generating about $10 per share of cash flow, free cash flow. So once you paid off your debt, depending on if you financed it with some debt or something, and again, I think that's going to be in the $25-30 million range. The rest is free cash flow. You can dividend portion of that, and you can spend you dividend half of it and spend half of it. You still have a $30 million exploration budget, which is a pretty damn healthy exploration budget to have. Now you're going to spend some of it on the Peak Gold joint venture lands. The best place to explore is right next to the ore body, as we all know. So we're definitely going to be doing that. And our share, $3-4 million a year, you'd have a pretty healthy exploration budget on a 100% basis.
Yeah, question for you. Where do you expect for the exploration to take place on the JV lands?
So there's no question in my mind that for the next 5 years, we are going to stay completely focused on what we call the Chief Danny area, that area that I kind of highlighted. We had all the geochemistry and geophysics and all the work it sort of focused on that area. There's no question that that's where we're going to spend the next 5 years exploring. An explorer and a deal maker by background, so don't be surprised if I come up with something else.